and that's it. That's just what we're trading. This is the same wedge we are seeing on the 4-hour chart that we're just looking at. Same wedge exactly. Now we were expecting to go all the way to, of course, we went to 50,000 and bounced, or 49,000 here and bounced. Actually, 49,500 was 4C. You would expect to go to 54,000, 61.8, and before you bounce back to 62. Well, the market, of course, had different thoughts. I believe this market bounced 58,000 or 57,500s. Probably we'll check it, maybe 56,500s, but I believe it's 57,500. So we bounced in between 78.6 and 61.8. We bounced this shoulder level. Does this take us to the neckline? I think so, 70,000. Before we get shoulders, so there's no problem. I mean, it doesn't mean this is going to be very bullish. It just means we hit the neckline and we are going to get more shoulders. Let's now take a look at that 4 hours. This is updated. So bounce didn't go all the way down to 55. It actually went to 58,500. This is quite accurate, very, very close to the current market action. Maximum, I believe it was 57,500. All right, so we have a higher shoulder to the right than the left, but wave B is finished. We're doing wave C. As of now, we should be seeing 5-wave structure, a trending market. We can actually buy and always have a hedge or a protective hedge below level 1. We just saw a 1 and a 2 unfold on, I believe it was the 15 minutes or the 30 minutes that we're looking at. So whatever we are buying at this point, 60,000, actually takes us to 70,000. Is it possible to surprise and break out higher? Everything is possible because this is the 4C. Can be the end of leg 4. Is this likely? Not really, because the 4C is a very lengthy wave. I can see an A, B, and a C, just high degree A. We get another high degree B. We'll get another high degree. So I believe we had, high degree A into 4C, have a B, and then an A, B, and a C into C. It's a very complicated, I think, projection. And the market really cannot be decided at that point. Let's take it to trade management. This is what we were looking at earlier. We apparently have a cycle extreme here, so there will be continuation. This is a 30-minute, same 30-minute that we're looking at. Remember, we're now at 60,000. This here is 59,900. 60,000 means we are above this neckline or taking out this neckline. Let's check it. And the bounce comes in at a level 3 or internally, of course, a level 1 at that green neckline. We did, of course, the update on a live 30 minutes, and the bounce, of course, is now valid. If this used to be a cycle extreme, there's no continuation, then it must be reversal if it is related to a level 1. Let's take it live then, check it. So the 1 hour, of course, is very close to the 30 minutes in a way. Let's just take it to 30 minutes, the same structure that we're looking at on our own analysis. Clear the chart a bit. All right, so the same cycle extreme, and the bounce comes in at 58,000, actually, not even 57,500, comes right on top of level 1. At the neckline. Bear with us a second. All right, of course, the momentum, we don't yet have a trigger, but we have a cycle extreme. Cycle extreme is usually a trigger, and this cycle extreme has worked because in reality, what we are seeing, we just discovered this now. If you have a cycle extreme, you've had a level 3 at this point and a level 5 after it. There was a rejection at a level 1. Maybe this was level 5, but now we have taken out level 1, so we are confirmed. And as we look at it, even the market is already moving higher. So very strong market. This is now institutional, and we really have very strong hedge funds buying into it, and mutual funds, if you wish to call them that, mutual funds. Therefore, very deep pockets. We join the market. We're seeing, of course, attack of the neckline at 62,500 immediately. Maybe you get a retraction, do shoulder levels, and then ultimately attack the neckline at 70,000, the one that we're seeing on the 4 hours. The neckline that we are seeing on the 4 hours is really the neckline to aim for. So this neckline, 70,000, is the one to really aim for. The first neckline is 62,000, showing here very clearly, 62,900. But I believe it's very close to the original neckline. If we go that far, we're going to 70,000, even on stop hunting. Again, breakout higher is a different matter. You can see a 4A, 4B, and we get an A, B, and a C. Is this finished? Can just be an A, B, and a C, like A, like B, another A, B, and a C. So we will probably break 62,900. If we get to support shoulders between 62,900 and maybe halfway between 61.8 and 78.6, and the market doesn't fall lower, then at some point we break above. But of course, we'd expect something of this magnitude here, like 1 to A to B to C, and this one in level 4 should be even longer in terms of time duration. So it still has more continuation or more consolidation. The 62,900 showing right there, and then of course 70,000. And over here we can see we are probably going to be doing more consolidation. We're expecting the bounce, but at much lower levels. We got it, of course, at 58, which is the shoulder levels. We were expecting stiff resistance at the shoulders. Remember, we kept saying that market will resist the shoulders several times and do a deeper head before it breaks higher. So market is supporting the shoulder. If we are in above 58, and if we bounce 58,000, then we have supported the shoulder. We've even supported the high shoulder because we are at 60,000. So we're going to 62, definitely 63, maybe 65 before we get to do more shoulder levels. Probably 70 if we begin to see positive momentum on the hourly frames. All right, over here we're showing, of course, 68. There is no resistance now at 59 because we're at 60. And the rest is history, I guess.